and I do appreciate that I'm sitting between everybody and dinner, so I will keep this fairly quick. On the 1st of July, there's some pretty major changes that came through, and I'm going to share a checklist that I've shared with Julianne and Charmaine, and you're all more than welcome to get a copy of this from either of them, or I can forward this on to you, which has my details down the bottom as well. Now, the 1st of July had some pretty significant changes. The government's been talking about raising the level of SG, or the super guaranteed contribution amount. That went to 10% on the 1st of July. Now, the important thing about this, a lot of your workers may or may not realise that their take-home pay may have dropped by 0.5% because it's gone from 9.5 to 10%. And if you're not paying them that amount, you'll need to start or look at back paying them for what you haven't paid them at the moment. Now, in saying this, most of your software packages should have updated that information or that sort of amount for you, and it should be automatic. But it's not a bad idea to check with your accountant or your bookkeeper that this is happening. A lot of people get into a bit of a hole. It doesn't seem like a lot, 0.5%, but if you've got a decent workforce or a decent amount of people, this can add up pretty quickly if it's not being done correctly. So that's point 2 on the checklist. There's 6 areas there, but I won't go into them all. They're all pretty straightforward. And you should be, like, they're pretty much out in the public domain that you're aware about. The other one that I just wanted to harp on as well, and there's another point after this that I'll talk about, which is called account stapling. But point 5 there is, are you paying super on time? Now, this is a really important one to look at. If you're paying your super on time, you're entitled to a tax deduction. So it's important that you try and keep on time with that. And as some of the other speakers have talked about cash flow, this can be pretty important when it comes to cash flow as well, freeing up that tax deduction at the end of the year or the end of your financial year with your accountant and making sure you're paying on time can see you get some reward back from the government for doing that as well. Now, that checklist, as I say, now it's available from the ladies at any time, or you can reach out to myself. If you look down the bottom of that, where to get help, my details are there if you want to jot those down or get them at a later date from either Charmaine or Julianne. I'm more than happy to talk to anyone at any time about any of these issues. Now, there was a big legislative change that came in called putting members' interest first. And what they're trying to do now with superannuation is make sure that nobody joining a company has more than one account. So there's a regime coming in from the tax office called account stapling, which staples your first account you started your working life with to your superannuation for the rest of your working life. So if someone joins your farm and doesn't have their superannuation details or doesn't know where they are, you'll now have to search through an ATO database to try and find their first superannuation. Sorry, I haven't shared that screen. I'll just share that now. There it is. Sorry about that. So the account stapling information is going to come in, and that's going to be from the 1st of November. So that's one to keep in mind when you're talking about looking at your new employees coming in from the 1st of November. Now, that's the government's got that through the Senate. It was supposed to come in on the 1st of July, but it's very important. If you're not looking for their stapled account, there can be penalties that the government will administer. But we have some ways to get around that and look at things so you can make it easy for yourself. And feel free to reach out to me to discuss this further. I'm forwarding both Julianne and Charmaine a summary of how this sort of works and what we're looking at doing for employers to help negate this. It's a big change. It's one they're very interested in adhering to. And the main reason is so people don't end up with multiple accounts. Years gone by, people have joined a company and said, I'll just go with your account, thinking their super follows them. It doesn't. You can often find junior people who've worked at KFC, Woolworths, a bottle shop, a pub, and then a farm will have 5 different accounts, 5 different lots of fees, 5 different lots of insurances. Fee erosion takes everything out of all their accounts and they end up with a very small amount going forward. So this is where the putting members' interest first legislation or just tries to fix all that. So I've left you with the most exciting part of the day to last. As Julianne will sort of adhere to, I'm never really that long with my presentations. That checklist there, as I say, available to anyone to use. If you want to pass it on to your payroll manager and they want to give me a call or an accounts person, feel free to. Otherwise, give me a call at any time. I'm always here to help. And thank you very much for your time. Enjoy.